Listen to this. Just 1 year ago, 4 U.S. cities had a total housing market value that exceeded $1 trillion. 4 cities. Now, 1 year later, that number is up to 8 cities. Well, look who's here. He knows a thing or two about this. Ryan Serhant is the CEO and founder of Serhant Real Estate, and he's the star of Owning Manhattan. It's on Netflix, and he joins us now. That's an astonishing rise in prices when many of America's cities are falling to pieces. Explain it.
I think what's far more interesting and potentially even scarier than that is that just 5 years ago, about 80 cities in the United States had a starter home value of about $1 million. That's a lot for a starter home, which basically means the bottom third of home values in that city. Today, just 5 years later, it's nearly 240 cities where a starter home is going to cost you just about $1 million. And it's because there's incredibly low inventory, and it has everything to do with the rates. So I'm very excited for what I think is coming in September and what's already started even this week with rates hitting 15-month lows, because we went into a recession on Monday, but it feels like we're back in a bull market today listening to you guys.
Careful. The best way for Gen Z folks to get into a starter home is surely to get some money off mom and dad. And mom and dad will tap into the stock market to get the money for the kids. Am I right?
Yeah, it's super safe. Mom and dad lend the kids money on margin, so I don't think there'll be any problems with that in the future. But yes, Gen Z is outpacing millennials now in home ownership around the country, not on the coast. New York and LA, it's too expensive. But in the Midwest, around many major cities, Gen Z is ponying up because rents are too high. The rents are too high, and they're saying, you know what, I want to have financial education. The parents will buy the home. About 50% of Gen Z home purchasers are now using some sort of family financial aid.
50%?
Yeah. Yeah, it's a big number. I don't expect it to last that much longer than where we are now, especially as rates start to come back down. But that's where we are as of today.
I want to hear about the new show. It's on Netflix. It's called Owning Manhattan.
Yes.
It's more than a real estate show, isn't it?
Yeah, it's the greatest show in the history of the world. It's amazing. It's the best thing I've ever seen on Netflix ever. But it is. It's an occupational docu-series. It follows myself and as we build our company, and so it's a mixture of, you know, I did a show called $1 Million Listing on Bravo for a long time. It's a mixture of that. It's a mixture of Succession. It's a mixture of a lot of these different types of shows, and there's really nothing else like it.
Do you make more money from real estate or from being on television? You're not going to tell me.
My life is a flywheel, right? We create brand awareness top of funnel that creates lead flow that goes into our education business, our brokerage business, and our production business. And then I just go round and round. I wake up at 4:30 and I do it all over again.
4:30?
Yeah.
I'm up at 2:45.
Okay.
Every
Should
morning.
I leave? Yeah. Competition, Stu. Let's go.
What time do you go to sleep?
What time do I go to sleep? It depends on the day and how many client events I have. Last night was 10:30, so I got a solid 6 hours, woke up and jumped.
Beat that.
Well, you're young. I mean, youngsters like you can do this kind of thing. A serious question. How has Manhattan real estate done since the pandemic? Straight up?
It has not been straight up. Real estate is bifurcated. You have luxury, and then you have everything else. The luxury market has done incredibly well. Nationally, luxury prices are up about 9%, while the rest of the market has had a little bit of a decline. You've had more price reductions, about 1 in 5 nationally in June. You've had more cancellations on contracts over the past 60 days than we've had in quite some time. But Manhattan, there's no place else like it. And we have incredibly low inventory, kind of like the rest of the country, and there's only so much you can buy.
Yeah, I'd like to live in Manhattan, but I can't handle the taxes. See, I'm a W-2 kind of guy. It's all on the books. Can't handle that.
It was you can crash with me if you want to.
Careful, careful, careful. It might happen. Ryan, you're all right. Thank you very much for joining us today. That was fun.